Hello and welcome to my channel, The Quality Investor. Another large player in the semiconductor industry released their earnings Thursday post-market. A favorite of mine, the chip industry has seen some beleaguered businesses the last few quarters as it works through a fairly nasty cycle trough. That player, Applied Materials, ticker AMAT, released their Q1 2024 earnings. And on the surface, it was a strong earnings release. They had beats on both the top and bottom lines. The $6.7 billion in revenue beat by 3.4%, and non-GAAP earnings per share of $2.13 beat by 11.8%. But it was the very strong Q2 outlook that had the market rushing to buy up shares post-market. They are up 11.7% in after-hours trading as of this recording, adding to a very nice 15.8% gain they've enjoyed year to date so far. CEO Gary Dickerson signaled on the call that in their discussions with customers, they're seeing improving market dynamics. He noted that cloud companies are upping their capital investments and fabs are increasing their utilization. He's also seen memory inventory levels normalizing, meaning all that excess inventory is finally being sold. The upbeat tone of the call certainly firms up my investment thesis for Applied Materials. Not only are they one of the largest equipment providers in the industry at 20% market share, the demand for chips will rise significantly in the next decade, meaning the equipment needed to manufacture those chips will also rise. Additionally, the services segment for Applied Materials saw strong growth yet again, with the CEO saying they may even have double-digit growth this year. The services segment rounds out the final point of my investment thesis. They generate a significant portion of revenue from subscriptions, and subscription revenue is my favorite kind of revenue. All right, let's dive into the report. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, don't forget to share this video and hit that notification bell so you can know right away when I post more stock analysis content. Okay, so here we're looking at the post-market jump Applied Materials had, and you can see a very nice 12% gain when trading was closed today. That, of course, was on the back of their earnings beat. We see the EPS beat here of 11.8% and that revenue beat of 3.4%. So quickly looking at their Q1 fiscal year 2024 financial results, we see their revenue was essentially flat year over year and sequentially. However, their gross margin did see a nice year-over-year bump of 110 basis points. Always very good to see that gross margin increase, especially with what we've been seeing in the rest of the semiconductor industry. If you saw my videos on both Texas Instruments and microchip technology, you saw a pretty steep decline in gross margins for both of those businesses. And coming down to the operating margin, again, these margins are flat. So Applied Materials is maintaining very nicely in this tough semiconductor environment. And looking at the segment results for Applied Materials over the last 5 quarters, we can see that semiconductor systems has seen a little bit of a decline in their revenue, which makes sense given the current environment. If the actual chip fabs are not making as much semiconductor material as they have been before, then of course they're not going to be needing as much equipment from Applied Materials. Looking at Applied Global Services industry, this is their star segment. We keep seeing rising growth here. And of course, when Applied Materials sells equipment to a fab, for example, they need to maintain that fab. And that's where that service subscription revenue comes into play. And finally, their last segment here, display and adjacent markets, fairly marginal to the business at this point, so I'm not going to really go into it. And looking at that all-important free cash flow number, you can see they had strong growth sequentially from Q4 for Applied Materials in the free cash flow, but essentially flat year over year. And one thing I really enjoy about Applied Materials is their strong commitment to the shareholder. You can see here their distributions to shareholders in the form of share repurchases of $700 million and dividends of $266 million. Looking at their growth thesis slide, we can see what the CFO is mentioning on the earnings call. Semiconductors are expected to significantly outgrow GDP, and fab equipment grows as fast or faster than semiconductors. And this is where Applied Materials really shine. So they have a strong runway for growth in the next decade, especially given how ubiquitous semiconductors and chips in general are to the modern economy. And that last point of my investment thesis is Applied Global Services. You can see they had record revenue in Q1 2024, and they've achieved 18 consecutive quarters now of year-over-year growth. And this is one of the important parts of my thesis here. So 2/3 of the recurring revenue is generated from subscriptions. 17,000 tools currently under service agreements with a 90% renewal rate. That's one very good thing about subscription revenue is whomever has a subscription, they tend to renew it. So it's a very good business model for a company to have. So what do these numbers for this quarter mean once we apply them to our valuation? And coming into this quarter, analysts are projecting revenue to be about flat to down 1 to 2% for Applied Materials in fiscal year 2024. But with the strong earnings release and the upbeat outlook, I'm putting them now at 2% revenue growth. Ultimately, that they finish now at 5.5% compound annual growth rate over the next 10 years for revenue. This is essentially in line with what analysts are projecting. Looking at operating income, for this year, I'm doing a 28% operating margin, and for net income, a 25% margin, and for free cash flow, I'm actually projecting a decrease down to about $6.76 billion. Ultimately, I have operating margin expanding to 31%, and net margin expanding 26%. That will give us about a 4.7% compound annual growth rate for free cash flow over the next 10 years. Looking at what they've done historically in the last 10 years, however, you can see that free cash flow is pretty conservative estimate. So I am being very conservative when it comes to my estimates for Applied Materials, even though they have quite a bullish outlook, especially with this earnings release. So after plugging those numbers into my DCF model, I get a discounted cash flow price of $207.57. Applied Materials does pay a nice dividend, projected to be about $1.34 for 2024, and using about 11% growth rate and a 7.25% perpetual growth rate for the dividend, our dividend discount model gives us a price there of $189.87. Their exit multiple comes in at a very high $294.95. And for my comps, I'm using ASML Holding, Lam Research, KLA, Integris, and Teradyne. And you can see I'm only using the median PE to be a little bit more conservative here, and that's a PE of 34.7 for these businesses. Applied Materials right now has a 22 PE ratio. And we can see historically, they're actually above average right now. So their 5-year average is 16.7 and their 10-year average PE is at 17.1. So it's going to be interesting to see if the market does expand that multiple over the next few years for Applied Material, especially given what the rest of the semiconductor industry is doing. At any rate, that comes to a valuation average of $224.99. And with a current share price of $187.66, that's a potential upside of nearly 20%. And I apply my 20% margin of safety. And I do like a 20% margin of safety for Applied Materials just due to the very cyclical nature of the chip industry. So after applying that, we get an acceptable buy price of $179.99 and a desired PE of 21.2 and a weight recommendation. And I must say, Applied Materials has been on a tear in the last year. You can see they're up 57% in 1 year, and they're up 15.8%, like I mentioned earlier, year to date. So there's really been not a lot of periods to pick up Applied Materials. They do have some dips here and there, and that's really the best time to pick them up, but they are on a tear. And if they have a significant increase in price and the market opens tomorrow, it's going to be tough for them to pick up some shares of Applied Materials at a good discounted value. However, if we apply a 10% margin of safety, what do we get here? So $202 as an acceptable buy price. It might legitimately get past that tomorrow when the market opens. However, what if we apply our bull case? So if we apply our bull case, we get an acceptable buy price of $225.76 with a margin of safety of 20%. So depending on your tolerance of risk and how bullish you are on this company, it may be a good value now to buy some shares. For me personally, however, I'm favoring the base case and a 20% margin of safety, so I might wait until we get another dip in Applied Materials before I pick up some more shares. All in all, another solid quarter for Applied Materials. They're poised for strong linear growth in their industry. If that free cash flow margin stays within the 28 to 30% range the next quarter, I will apply my bull case scenario to their valuation. So before we go, I do want to emphasize this is not financial advice, and I currently own a very sizable stake in Applied Materials. With that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below. Also, please hit that like button. And if you found this content useful, consider subscribing to the channel and joining our community. Thank you and happy investing.